Afternoon. Good afternoon. Welcome to this fourth webinar of the Gender Lens Initiative for Switzerland, which is a working group hosted by Sustainable Finance Geneva. SFG, Sustainable Finance Geneva, is the first Sustainable Finance Association of Switzerland. It was created in 2008. It is the organizer of Building Bridges, the Swiss Sustainable Finance Week, which will take place on the 29th of November that week. And during that Building Bridges week, we will have a GLIS gathering, the first one, because our initiative was launched in March 2021. So for the first time, we're gathering all of our partners on Tuesday, the 30th in the morning. And we hope that for those of you who are in Switzerland and Europe, you'll be able to join us either in person. We're expecting about 100 participants on site, or the session will also be live streamed. So the GLIS essentially has three pillars. The first one is academic research. The second one is products and financial innovation. And the third one is industry standards. And using these three pillars, we try to share best practices and encourage the mobilization of capital for gender lens products and approaches. As you'll see, there's a wide range of products available today. According to Phoenix Capital, who's our partner for this event, there are close to 200 funds today that claim to be gender lens funds, and they're across multiple asset classes, investing in different sectors and regions. So there's really no reason today for institutional investors in Switzerland and beyond not to have capital commitments for gender lens products. And our hope here is to inspire institutional investors to invest more in products or to launch their own products, of course. And if anyone has any question beyond the webinar itself, you can either contact Sustainable Finance Geneva or Alpha Mundi, and we'll be happy to support you in those endeavors. Today, we're happy to welcome three outstanding speakers from Natixis Mirova, Swift Capital, and Water Equity. Our first speaker is Soliane Varlet, and each of the speakers will have about 10 minutes to present their organization and their fund. And at the end of the three presentations, we'll have a Q&A. In the meantime, if you have any questions for the speakers, don't hesitate to write them up in the Q&A function or the chat of your Zoom window, and we'll try to address as many as possible in the time remaining at the end. So without further ado, my thanks to the speakers for making themselves available today. And Soliane, you have the floor.
Thank you, Tim, and good afternoon to all of you. I'm Soliane Varlet. I'm the fund manager in charge of the Mirova Women Leaders Strategy Fund. So maybe I'm going to start by saying a few words about Mirova. So as you can see on the next slide, Mirova is an affiliate, a subsidiary of Natixis Investment Manager dedicated to sustainable investment. It's been created in 2013, first as a department of Natixis Asset Management, and it was then spun off in 2014. We started with 4 billion euro assets under management, and today we've got more than 23.5 billion euro assets under management. So we've got 6 areas of expertise, both in listed and non-listed assets. I think one important thing for us is that Mirova is now a B Corp company. We really want to cultivate and deepen our expertise in sustainable development and to innovate continuously in our products. Our Mirova Women Leaders strategy is really part of this continuous innovation. There are very few funds which target social issues today. And here, with this global equity strategy, we have a focus on SDG, Sustainable Development Goal number 5, gender equality. And our goal really is to promote gender equality and women's empowerment in the workplace. As far as our investment philosophy is concerned, and you can see that on the next slide, this strategy, like all our strategy, has a double objective. So we want financial performance, but we also want social and environmental impact. We want both. We don't want one or the other, or one at the expense of the other. We really want both. Obviously, here we've got a strong focus on social impact, but there is also an environmental impact because this strategy is aligned with the 2-degree scenario. So how do we do that? Two things mainly. We are long-term investors, so we've got a long-term investment approach. We've got a sustainable vision of the economy. The Sustainable Development Goals of the United Nations are really our framework. So we want to invest in solution providers, in companies that will help to reach the Sustainable Development Goals. And then we do in-depth fundamental analysis. So we also have like a bottom-up approach. So this is the case for all our funds. For the Gender Diversity Fund, we've got one additional step that I've described next on the next slide. So here, the idea for us is to identify companies that will promote women's access to top management. Why top management? Why you focus on top management? 3 reasons. First, because it's a leading indicator of a company's commitment to gender equality. Then because there is a spillover effect within the whole company. A woman CEO is twice more likely, for example, to have a woman CFO, and she's also more likely to have women running business units. And the third reason why we've decided to focus on top management is because of the link between more diversity and especially more diversity at the top of the company and better economic performance for companies. So we've got quantitative and qualitative criteria. Our quantitative criteria, we've got 3. First, we want a high women participation in the executive committee. A high women participation in the executive committee is at least 30%, 30%. This compare with on average 15% for the MSCI, for the companies of the MSCI world. So we want more to double the average. Our second quantitative criteria is we want companies led by female, i.e. female CEO and or a female CFO or both, but you won't find a lot of companies with both. Maybe here in France we've got MG. We used to have quite counterintuitively General Motors in the US, but this is not the case anymore. You've got a few, but not so much. Our third criteria is we want companies with a good balance between the percentage of the female in the global workforce and female in the executive committee. What is a good balance is less than 15% difference. And maybe I'm going to give you an example. Michelin, the tire company, French tire company, you've got 20% of women in the global workforce. And you've got 20% of women in the top management. So here really, when you are, whether you are a man or a woman, you've got equal opportunity when you enter this company. They really secured a career path for women. So this is the kind of company that we are happy to see in our fund. And this is true for Michelin, but this is also true, and this was one of our surprise for tech companies in the US. That's true is that you don't have so many female in the global workforce, but some of them, like Adobe, for example, they've got 30% of female in the global workforce and 30% of female in top management. So just to give you an idea. So these are our quantitative criteria, 3. Obviously, the more quantitative criteria for our companies, the happiest we are. But we don't stop here. We also do a comprehensive qualitative assessment, obviously before entering a company into our portfolio. So what does it mean? We look at gender diversity policies. We like, for example, leadership program, 50% men, 50% female. We like sponsorship program made by men for women. We also like work-life balance programs like crash subvention, for example. And one area that I like is also paternity leave. I think this is a very powerful measure as well. And when it's possible, we really like to have data, like, for example, gender pay gap, or internal rate of promotion. So this is what we do for our qualitative assessment. So once we've identified companies that are going to be in our investment universe, obviously we are going to have some additional steps to come to our portfolio. Then we are going to do a financial analysis, and then we are going to do portfolio construction. And here it's conviction-based portfolio. It means 50 names in the portfolio and a low turnover. As I said, we're long-term investors. So when we invest in a company, we are very convinced, and we invest for the next few years, not just for the next 6 months. So this is for the our first objective, financial performance. Now we are going to switch maybe to the impact of the fund, and maybe here the social impact. So on the next slide, 3 ways really for us to have a social impact. First, it's probably the way we select companies. This is the first way to have an impact, and then we've got a dedicated engagement policy. We engage with all the companies that we've got in our portfolio. So when we think we can improve practices, for example, we are going to engage. When we also share best practices that we've seen with other companies. So we engage with companies in our portfolio, but also in all Mirova's portfolio. Another way of doing engagement is by doing some coalition with investors. And we've launched an investor coalition in partnership with UN Women and with some other asset management. And here the idea was to send a letter and to engage with corporate. The first goal was probably to raise awareness among corporate, to let them know that investors care about diversity, that they want more transparency, more data. And obviously, we are also calling on companies to take decisive and concrete actions. Last way to have an impact, and here it's a very concrete way of having an impact, it's through our partnership with UN Women. So we give them a portion of our management fees, and then they will use it to fund projects that are led by women around the world, and maybe in developing countries. So it is a very concrete way, but it's also a very complementary approach to what we do in the fund, because obviously the fund is really focused on big companies in developed countries, and the projects financed by UN Women are really smaller projects led by women, but in developing countries. I think...
Yeah, you have a couple of minutes left.
I've got a couple of minutes left. Okay, maybe I've been too quick. So maybe I've got one next slide. So well, I mean that was all for me. So maybe I could come back on some of the topics that I've just run you through. But here are the 5 key points of the portfolio. I would be more than happy to answer any questions. And I think now I will hand over to Jennifer. Thank you for your attention.
Thank you, Soliane. And Jennifer, the floor is yours.
Thank you. Thank you. Hi, I'm Jennifer Beckley. I'm normally based in Singapore, but in Europe at the moment. I'm the founder and managing director of Swift Capital. And today I was going to tell you about the firm, our first product, as well as really talk you through what we're doing in the region and what is happening in the region from a women's economic empowerment perspective. Maybe moving to a little bit about our firm. Necessary disclaimer. So we are a Singapore impact investment firm. About me, I've spent 25 years in the private equity industry. I was leading GE Capital's private equity business for Europe, Middle East, and Africa. Moved over to Asia 10 years ago. And when I moved, I started to see the social needs that were on the ground in the region and really wanted to make a difference there. So moved into impact investing 6 years ago. And since then have been focusing on this area of women's economic empowerment. As far as Swift Capital, we're a team that's based across Vietnam, Indonesia, and the Philippines. For our first fund, it's a $100 million fund investing in 10 to 12 companies. These are EBITDA positive businesses where we're providing growth capital. And I will come on to how we think about our investment strategy and our approach. I'm excited to, you can see in the background, today we're very honored to be awarded by UN Women and Empower, one of the 3 Asia Pacific awards for leadership commitment under the WIPS program. The reason for that award was linked to 2 things. One is we're one of the few or only private equity firms in the region that are led by a woman and having a woman investment team, and also for the work that we've been doing in the region to really support the integration of gender equality principles across the business communities and entrepreneurs for the countries that we're operating in. So let me come on and tell you a little bit about our investment strategy in the region. Actually, maybe before doing that, why gender equality? That is something that our investors ask us often, and we try to talk about it from many different dimensions with them. So very much within the firm, we're very focused on improving the quality of lives for women. And that's what we're looking for from an impact outcomes perspective in all of our work. We want to seek to increase women's workforce participation, but also ensure that that is done in a way that women have a quality livelihood. In our region and around the world, we all know that there's products and services gaps for women, and we want to fill those, and there's wonderful commercial opportunities and investments to be made in that area. For the large institutions, the pension plans especially, they really need to think about what can be done to support their better retirement for their members. And so we spend a lot of time talking with pension plans around the world about how to integrate these gender equality aspects into their social impact frameworks. And we're very proud that the first anchor investor in our Southeast Asian fund was actually a Danish pension plan. And then the message we're also trying to give to the investment community is around the fact that we see diversity as being a value driver, and there's many different levers for that, which I can explain shortly. Coming on to our region and our strategy. So from our perspective, we were originally investing a women's-led mandate. Our first fund was a demonstration fund where we received money from one of the governments in the region to invest in women's-led businesses across Vietnam, Indonesia, and Philippines. Now, our learnings from that program were that if we wanted to make a difference to women in the region, we needed to think about this area more holistically and look beyond only women entrepreneurs, but also look at the sectors within our region that are being powered by women, where the majority of the workforces are women, and how we can make a difference to improving the skill sets in those sectors and improving the livelihoods and career paths for women working in those sectors. As I mentioned, from the women consumer perspective, lots of gaps there that need to be filled within our region and beyond. And also the other thing that we found is through our work, we really wanted to work with those entrepreneurs that were thinking about the levers where gender equality was playing a role in their business. So what do I mean by that? It's really helping the entrepreneurs we're working with understand that if their decision maker for their product or service is a woman, how do they need to think about that in the context of building their business and putting processes and policies in place. So it's thinking about marketing, sales, after sales service. It's looking at, who is in their product and services design department. And then thinking about the diversity within the overall organization and thinking about how that touches on value chains. Coming on to the next slide, when you start to bring this all together, it means that we often work within 3 sectors, and I'll explain a little bit about what's happening in our region. What we're finding in Southeast Asia, it's a wonderful region. It's a high growth region. It's come through COVID reasonably well, notwithstanding the fact that we've had quite significant lockdowns, with some of the countries effectively been in and out of lockdown now for 18 months. You know, that's caused the entrepreneurs to rethink about their businesses. It's also opened up opportunities for those entrepreneurs. But we find that there's a phenomenon in the region that, particularly as women are getting married and becoming mothers, they're starting to think about work and career and family balances. And many of those women are actually coming out and wanting to found businesses. And where they're thinking about founding those businesses, they're coming out of the sectors where they're prevalent in the workforce. So this is why we tend to work within healthcare, within food systems, within education. And as they're thinking about the businesses that they can grow, they're looking for commercial gaps, but they're also thinking at that point in their lives about the next generation and what are the challenges for the next generation that they could be making a difference to. So that's leading them to found businesses that are really solving challenges that we have in region with quality healthcare services. We have significant overcrowding in the hospital system in the region. As soon as you get out of the main urban areas, the level of equipment in Southeast Asia is something similar to sub-Saharan Africa levels. So anything that we can be doing to support the development of healthcare systems is critical. Likewise, from an education perspective, how can we ensure the next generation has the skill sets they need? From that area, I'm really excited about the vibrancy we see in areas such as the development of STEM education and encouraging more girls to pursue careers in innovation and have the skills they need. Likewise, on food systems, 75% of food is actually coming out of Southeast Asia. It makes a real difference when we have entrepreneurs that are thinking about the way food is being produced, and also really looking at how do we ensure that that food is healthy within the region, and that supports healthcare within the region. And what we find is that climate is something that cuts across all of these areas. And the entrepreneurs that we're working with, while they're very focused on gender equality, equally they are thinking about other areas of sustainability, and they are thinking about building their businesses in a way that's supporting climate change. Why don't we come on to the next slide? So we're a very entrepreneur-led firm. We're pretty much talking to our entrepreneurs every day or every week, and we're finding that we're starting to engage with those entrepreneurs often 3 years before we're investing in the companies, and really providing a lot of counseling and coaching around how to build their business. Why is that the case, especially in Southeast Asia? It's linked to the fact that the entrepreneurial ecosystem in Southeast Asia is underdeveloped. We don't have the depth of advisory services around the entrepreneurs that you do in other parts of the world. So the onus is on firms like ours to ensure that we are providing the business support around these entrepreneurs. And particularly for women entrepreneurs, it's even more important because they don't have access to the support that, maybe other entrepreneurs do. But I would say this particular phenomenon is true for all entrepreneurs. So we need to be helping them with their corporate governance and their financial control systems and their marketing strategies and their operations. But alongside that, another area that we see as part of our value creation work is supporting those entrepreneurs and understanding where gender equality is going to act as a lever in their business, and why, they're going to have more productive workforces. We've seen it with the companies that we've been working with so far in the region. It reduces their recruitment costs if they bring more women into the business. They train those women and support them from a flexible work and remote working perspective to allow them to operate in a way that suits their particular personal and professional setup. Coming on to how we look at that particular area around gender equality and how we measure it.
We have a couple of minutes left.
Perfect. So we've been knowing globally for some of the tools we've developed from a gender equality perspective. Our latest tool is called Agendaroi, and how we use this, it's a diagnostic measurement and management tool. It can be used by any private equity firm or impact firm to integrate gender equality into their investment processes. Likewise, the same type of approach can be used by a large institution to think about their portfolio construction. And this is where the work around social impact frameworks with those institutions comes into play. What it is we use it to engage with the entrepreneurs. We talk them through the tool, the 24 parameters that we use within the tool. And then at the point we're investing, we do a diagnostic of the company in these areas. And then in our value creation plan, we integrate, as we would with strategy, financial control work, governance work, we have a gender improvement plan we're working on with the companies. And then over the life of the investment, we track how they're improving and what we can be doing to support them in that area. Now, how we think about the tool is we're looking at the outcomes for women across 3 pillars: resilience, opportunity, and inclusion. And then we're looking at enterprise dimensions. This is, for an entrepreneur, how they're thinking about their companies. So looking at where women are playing a role in leadership and how we can support the promotion and career advancement of women. We're looking at the overall workforce, what we can be doing to make a difference to the workforce. We're also looking at the enterprise in the context of its value chains. So from the perspective of suppliers through to the marketplace, that's incredibly powerful, because that's where you get the most leverage to be making a difference to gender equality across complete value chains, from the first supplier all the way through to the consumer. And finally, helping the enterprises really understand the role of the enterprise in developing society. So this is where we touch on things like climate change. We look at gender-based violence in this area. We're looking at corporate social responsibility, what companies can be doing in that area. Also advocacy, because one thing we see within Southeast Asia that does make a difference to women is where we can start to change the cultural and social norms within our countries to make it easier for women to participate in decision-making and have their voices heard. Now, one company can't do that alone, but if we can have all companies working together and the business community stepping up and engaging with the governments, the NGOs, and the whole system around them, this is where we see that we can all really benefit women's economic empowerment globally.
Thank you.
Thank
you very much. That's perfect. And we'll have time for Q&A in just a second. Last but not least, we've got Emmanuel Elan from Water Equity. The floor is yours.
Yes, hi. Thanks so much for having me. My name is Elan Emmanuel. I'm the Chief Investor Relations Officer from Water Equity. Based in the United States. So great to be connected with all of you around the world. Next slide, please. And actually one more. Next slide, please. Thank you. So we are, Water Equity is quite unique in that we are really we believe the first asset manager that's exclusively focused on solving the global water and sanitation crisis. And how do we do that? We do it by investing in financial institutions and enterprises in emerging markets that are specifically focused on delivering water and sanitation services to low-income consumers and families. As I mentioned, I'm in the United States, but the vast majority of our team is actually based in the countries where we're investing. That's around, and we have a fairly global remit. So that's Latin America, Sub-Saharan Africa, and South and Southeast Asia. I think what's also a bit unique about us is even though water equity has been around for about 5 years, now 6 years, we have 3 funds that we've launched, all private debt, though soon we will be, in the near future, we'll be moving into private equity as we move more into the water and sanitation infrastructure part of things. But what's unique about us is, as you can see on the top right, is we actually were emerged from water.org, which perhaps some of you have heard of, which is one of the largest and most well-known water nonprofits in the space that's been operating for about 3 decades and continues to operate around the world. And we work very closely with them, even they're really focused on the nonprofit side of things, whereas we're the asset manager. Next slide, please. So one of the first questions I often get is I think people are sometimes, if you're new to the space, you think perhaps water is not an investable opportunity. And really where water equity came from is it has to be. If we're really going to solve SDG 6, we use a lot of water analogies. If you look on the left, you'll see that the amount of development assistance that goes into water is literally a drop in the bucket. That unless we can move the capital markets in this direction and of investing in water and sanitation, then there's no way we're going to solve this crisis. And in fact, it is an investable market. And you know, as we know, this is an incredibly urgent issue from a development perspective. You have 1 in 10 people who don't have access to safe drinking water, even more 1 in 4 people who don't have access to sanitation. Really where we're coming from this is that water and sanitation really sit at the nexus of development and the nexus of the SDGs for so many issues. If you don't have water, it can or safe sanitation, it can affect your income, it can affect your health, and it really touches on so many important SDGs. And we have to act fast because, particularly with climate change, as we know, these issues are only being exacerbated, and it's only affecting the most vulnerable populations in the world. Next slide, please. So another thing I think that's unique is that we, you know, our focus on gender it's really core to the DNA of what we do. And the reason is that not only are the direct beneficiaries of our funds the predominantly women, but women and girls are really disproportionately affected by the water and sanitation crisis. And anyone who's traveled to the countries that we're working in can really see this firsthand. Just a few stats that I put here that are, I think, really profound. Women spend, 200 million hours collecting water, and finding a place to, and 266 million hours every day finding a safe place to use the bathroom, subjecting them on the latter point of using the bathroom, often being subjected to violence in trying to find these safe places. And then, of course, with access to safe water and sanitation, if you don't have to travel to use the bathroom, if you don't have to travel to use water, if you don't have to pay exorbitant amounts to buy bottled water, you have much more opportunity to participate in the economic system. And again, a statistic here is that when all women work, global GDP is projected to rise by 28 trillion. So in addition to this, the direct beneficiaries of a lot of our funds being women, we, of course, in the companies that we invest in, we very much integrate a robust gender lens framework into our investment process, which touches on a lot of the same criteria that my co-panelists have already discussed around women's participation in leadership and policies that those companies have. So it's really that sort of double framework of course, we're focused on end beneficiaries, but we really do a robust gender lens analysis of any company before we invest. Next slide. So the main fund that we have open right now is called the Global Access Fund. Again, this is a private debt fund. It's a 7-year fund that will reach at least 5 million people with water and sanitation over the next 7 years. We are very fortunate to have a strong relationship with the United States Development Finance Corporation, which is the development finance institution of the US government, which has provided us a substantial amount of senior debt to help catalyze additional investment into the fund. We actually had an initial target raise of $150 million. We've actually exceeded that raise and are keeping the fund open because one, it's great to see so much interest now coming into this space, but also there's tremendous need and tremendous pipeline available for this capital to continue to bring individuals water and sanitation. And so it's a fairly simple fund structure. And the countries that are highlighted in blue in the background are many of the countries in which we're working. Next slide. So the investment we tend to think at Water Equity of water and sanitation in sort of two ways. You have the supply side of water and sanitation. I think we all know that there's a real need to invest in water and sanitation infrastructure around the world. It's extremely undercapitalized, and that is a direction that we're moving in Water Equity, which is more of a private equity framework. But where Fund 3 and our current funds have really focused is really on the demand side for water and sanitation. I think many people don't know that there are actually, hundreds of millions of people that could have water and sanitation, but for the existence of affordable capital to actually put that into their homes. So this is, families that are literally living above functioning piped water systems, but because they can never save the $200 or $300 necessary to tap into that system, they instead can't access that water and are forced to find water elsewhere, pay exorbitant rates, et cetera. And so what these funds are really trying to do is to target that. This is not the poorest of the poor. This is, more for whom charity is always going to be necessary, but really a huge parts of these populations that are working, that have incomes, but they sit outside of the traditional banking system. And so what Fund 3 is really doing is working with microfinance institutions that have existing water and sanitation loan portfolios and providing them with dedicated capital to dramatically scale those water and sanitation loan portfolios. Again, this is a tremendous market need. There's very few people in the space. And just as an asset class, microfinance is really well established at this point, having, extremely low default rates over the last 2 decades, and of course, providing, a strong source of portfolio diversification. Next slide, please. So this is just an illustration of how our fund works. It's quite simple. There's sort of two lending cycles. In essence, we're providing typically 3 to 4 year loans. So our funds are 7 years. We're typically providing 3 to 4 year loans to these financial institutions at around $5 million. They in turn are slicing up that capital and providing these $200 or $300 loans to families. Those families have 18 months to pay back those rates. And those rates, across Water Equities funds have been repaid at a 99% rate. The reason, and a question we get, of course, is how are people able to pay this back? The reason is that there's immediate value creation that happens when an individual gets water and sanitation. They're immediately, their healthcare costs are lessened, their incomes can go up, and then of course it's much easier for an individual to pay back a loan on a weekly basis than it is to put forward a lump sum up front. Next slide, please. So as I mentioned, we're really focused on, I think as all the panelists are here today, on we believe that for the capital markets to really move into this direction, these are not concessionary investments. We believe that you can do well and do good with these types of investments. And so through our 3 funds, in which we've actually been able to increase the target returns over time by having additional leverage, we've reached over 2 million people. 98% of whom are, 98% of the direct recipients of these loans are women. But of course, even when the direct recipient is not a woman, it's really the women and girls in the family that are most impacted positively by having water and sanitation in their homes. And we've had, consistent with low default rates across the microfinance sector, really low default rates across less than 0.1% across our funds. While providing attractive returns to our investors. And just to be clear, again, these are not what this fund is focused on. It's not, a silver bullet technology for water and sanitation. These are individuals who are putting very simple water and sanitation solutions in their home, like a toilet, a piped water connection. Maybe if they're living outside of an urban center or rainwater harvesting system, and obviously it has a tremendous impact on their lives. And so we're, there's tremendous opportunity to continue putting the capital markets into this space, and that's really our mission moving forward. So thank you very much, and pleasure to be here.
Thank you so much, Elin. That was a very comprehensive and concise presentation, and also very inspiring. I think there's not that many products that focus the way you do on water equity.
Thank you.
So, sure. So we have about 10 minutes for 15 minutes for the Q&A. The audience is welcome to write their questions in the chat, but in the meantime, to get the ball rolling, I would just have a couple of questions first for Soliana and Jennifer. If you can remind us on your funds, the size of the fund currently, the terms in terms of management fees and or carry, and what sort of investors you're looking for. Maybe we start with Soliana.
Okay, I'll start. So I didn't mention it at the beginning, but the fund was launched in 2019, end of March 2019. So it's quite a new fund. We are just around 200 million euro asset under management. In terms of investors, we are happy with obviously institutional investors, but we are also happy with retail investors. I mean, with people like you and me who could also invest. So I mean, it's really open to all investors. And obviously we've got on the equity side, we've got different share class types. So you're going to have, if you put a very big amount, you're going to have management fees that will be lower. So I cannot answer just by giving a number, but it's around, for institutional investors, it's around 0.9% fees for this kind of fund. I don't know if I've forgotten one of your questions. I think I've answered everything.
No, that's great. And in terms of liquidity, when can people go in and out?
Every day. I mean,
daily. Super.
Yeah.
Okay, great. No, that's fantastic. Thank you, Soliana. What about you, Jennifer?
So for our fund, we're a standard private equity structure, so 10-year life, fees at 2% management fee, 20% carry. We've had our first closing, so we're tracking to 20 million. We're having the second closing in February and a final closing at the end of the second quarter next year. Our minimum commitments are $1 million, but there are a couple of countries in the world where we're finding that there are high conviction impact, families or high net worth individuals, where we are working with aggregated providers to allow those commitments to be aggregated through feeder funds. Nothing in Switzerland yet in that regard, Tim. And then generally, we're looking for a broad range of investors. So as a selection of insurance companies, pension plans, foundations, and then the family office community within the fund, and 1 to 2 DFIs.
Okay, great. And the return expectations would be of what?
Similar private equity, so growth capital, underwriting the deals at 25% plus gross IRR to generate a net return of mid to high teens.
Well noted, thank you. I was interested, Elin, by you're mentioning that you are in a way a spin-off, if I understood correctly, of water.org, and that you've become their investment arm. Is there still a tie between the two? Do you give some of your proceeds to the charity?
So that's correct. So we don't give some of our proceeds to the charity yet, although I think there is a point where we scale where that will be something that happens. But we do work with them very closely, really as sort of an asset origination almost arm of what we're doing. I didn't get too much into water.org's mandate given the time, but what they actually do is provide a great deal of technical assistance to enterprises and financial institutions to get them to a point where they're investable. Well, not only to a point of where they're investable, but also, of course, where the impact is solid. They're helping them, for example, in the case of financial institutions, refine their water and sanitation micro-lending program so that we can get to that 99% rate. But of course, and they're operating in countries and maybe at the size of institutions where we wouldn't yet invest because they're not investable. But as they sort of graduate receiving that technical assistance and become an investment worthy entity, that's really when water equity takes over. So to some extent, it's almost as if there's a technical assistance component put into the fund, but it's not actually in the fund, which is great because investors don't have to pay for it. But we're very fortunate to have such a direct relationship with them.
Fantastic, thanks. And just in this last bit, there was a bit of noise echo for some reason, but there was no noise echo during your core presentation, so no issues, and all well understood. Speaking of impact, Soliana, I really like the model of your fund where you're focusing and you're encouraging companies to have stronger gender equity at the leadership level. You also mentioned that there was a bit of a disconnect between your partnership with UN Women and the size of the companies that you're investing in, right? They're operating in different segments. Can you do just an extra comment on that? Explain how UN Women are linked to your fund and or fund model from the impact perspective.
Okay, so before we launched the fund, we really wanted to have a partnership in order to have an impact as big as possible. And as I explained, with the fund, we are gonna target diversity, but for big companies, listed companies or big companies, and in developed countries. And so with UN Women, there is this complementary approach because we are on very small size projects in developing countries. So how does that work, really? We've got this partnership and we give a portion of our management fees. So when you asked me some questions about, we give them a portion every year. We had a floor during the first year because the fund was very small. But we give them a portion of our management fees and they use it to fund projects that are led by women. So they do the work of selecting projects around the world that are led by women. So that could be projects led by women, but it could also be to help women with assistance on juridical point, or so this is how it works. But they are totally independent. We are not helping them to find the projects.
No, that's great, and I think if all financial industry funds dedicated some of the management fees to key NGOs and partners, that would be a very different world indeed that we'd be living in. So that's a very inspiring example. My last question before giving you a round of final comments to each of you, for Jennifer, also on the impact front, in impact private equity funds, we're seeing an increasing practice of linking somehow the carry to the impact. Is that something you've thought about? Or is that not part of the model yet?
And where it's part of the model is in our value creation plans, as I mentioned, we integrate our gender improvement plans. So where the incentives come in is with each investment professional within their annual bonus structure. So we're looking at the performance evaluation associated with different objectives, and we've put in place for each company this year. So it is captured there as opposed to within the carry structure. And I did notice a question coming through from David, where he was asking about maternity leave packages and are we taking them into account and evaluating gender performance. I think in our situation, we're not really looking at the gender performance of the company as such, in the sense that we see that we're a stakeholder alongside the entrepreneur and the business. So that performance is our performance as well. But what I would say is, in our particular case, we are really working with the leadership team in each of our companies around those benefit structures. And every country in the region that we are working with has a different law around maternity leave and how that's structured and social insurance. So we really are trying to get them to best in class. And we have leveraged the work of UN Women, ILO and others, and actually figuring out from a maternity leave perspective what would be best in class. So that's part of our gender ROI work to help the entrepreneurs be thoughtful about all benefits packages.
Wonderful. We'd be very happy to post on the GLIS webpage any material that you have on gender ROI. I think that's super interesting. All right, we're running out of time, so final round of comments. Soliane, there is a question about whether you could give an example of the behavior of a company that's changed after receiving the investor letter, if you have such an example.
Okay, we had so many, we had so many reactions. Just one. We asked to sign for the Women Empowerment Principle of the United Nations. So a few companies did sign the Women Empowerment Principle, which is a first step, but very concrete steps taken.
Thank you. Last comments. I'll start with Jennifer. If we can make them short, thank you.
The last comments. I think, yeah, I hope we've given you a perspective for the vibrancy of what's happening from a women's entrepreneurship in Southeast Asia and the other markets that my fellow panelists have been covering.
Perfect, thanks. Elin, what would be your last message to the audience?
Hopefully I'm not echoing again. But I would just say, you know, there's such tremendous opportunity to affect the lives of families and women in particular through investments in water and sanitation. And so encourage everyone listening to just look at the funds out there that are really focusing on this issue and try to get more capital into the space. Thank you.
Thank you, Elin. Soliane?
I would probably say exactly the same as Ilan. There is so much opportunity. I think we are at the total beginning, I think, of gender diversity investing. It's still a very niche market. There are so many opportunities. So I think the idea is really to raise awareness among, of course, corporates, but also among investors. I think that's very important.
Duly noted, and we'll certainly do our best in Switzerland through the GLIS to echo that message. So my thanks to the three panelists, really fantastic presentations, very inspiring and innovative fund models. And to the audience, well, we give you a rendezvous at the Building Bridges Week, which will start on the 29th of November in Geneva. We hope that you come numerous with your COVID passes, of course. And we hope to see you both at the technical session on gender lens investing Tuesday morning and at the gender lens cocktail in the evening. So thank you very much. My thanks to Sustainable Finance Geneva, to Phoenix Capital, and to all the GLIS partners.
Thank you.
Goodbye.
Bye-bye.
Thank you.